My name is Agustín Redonda. I am a senior fellow with the Council on Economic Policies, which is a think tank based in Zurich, in Switzerland. And this chapter on tax expenditure reporting and domestic revenue mobilization in Africa, I co-drafted it with Christian von Haldenwang, a senior researcher with the German Development Institute in Germany, and Florim Aliu, who is a consultant also with the Council on Economic Policies. We looked into tax expenditure reporting, which is a topic that is highly overlooked and yet has significant potential, for instance, as a way to increase tax to GDP ratios. So let me give you a bit of background of what I have in mind. So the IMF, for instance, estimates that low-income countries need additional resources amounting to more than 50% of GDP to finance the SDG agenda in 5 key areas, including health, education, and electricity by 2030. Of this amount, 5 percentage points of GDP needs to come from taxes. So increasing tax to GDP ratios is indeed vital, and yet increasing taxes is very challenging in most of these economies. Why is that the case? Well, for many reasons, but just to enumerate a few, tax administrations simply lack the resources in developing countries to do a better job. Informality has this shrinking effect on tax bases. Tax compliance is very low, often explained by a lack of trust in governments. So whatever the reason is, in this context, we think that reforming tax expenditure systems, what we mean is to phase out ineffective tax expenditures, should be seen as a low-hanging fruit for developing countries. That was a bit the spirit of the chapter. And in this context, we think that estimating and reporting the fiscal cost or revenue forgone through tax expenditures is a necessary, although not sufficient, condition to identify those tax expenditure provisions that should be eliminated or phased out, and hence for tax expenditure reform. So unfortunately, though, as we show in the chapter, the lack of transparency in the tax expenditure field is striking. And just to give you a few figures to back up what I'm saying, so 60% of the 54 African countries did not publish any tax expenditure data between the years 2000 and 2019, and only 40% reported on tax expenditures at least once during that period. So let me, just to conclude, add that the analysis in the chapter is part of a larger project led by the Council on Economic Policy and the German Development Institute to build the first global tax expenditures database, the GTED, and the GTED will be launched by May this year. But I can anticipate that the opacity in the tax expenditure field is not only an issue in Africa, right? For instance, there are 3 European Union member states, Cyprus, Luxembourg, and Malta, that do not report on tax expenditures at all, and at least other 5 states, member states, Czechia, Hungary, Portugal, Romania, and Slovenia, that only provide very limited information. Unfortunately, we confirmed what we suspected before starting to write the chapter, that the lack of transparency in the tax expenditure field in Africa is striking. You know, as I said, this is not only an issue in Africa, but the scenario is significantly bleaker across low-income countries. That was confirmed. This said, and to remain on the positive side, we also learned that the number of countries reporting tax expenditures in Africa has been increasing over time since the early 2000s. And also that there are a few countries in Africa that are doing indeed a very good job, even when compared to rich economies in the estimation and reporting of tax expenditures. Morocco, Burkina Faso, and Ivory Coast are 3 worth mentioning cases, since they report very detailed information on top of the fiscal cost estimates at the tax expenditure level. So that's very interesting to see. And when it comes to the magnitude of the revenue forgone through tax expenditures, so the fiscal cost, again, we confirmed that in general, the fiscal cost of these tax expenditure provisions is significant in the region. On average, we found that tax expenditures account for roughly 3 percentage points of GDP, and almost 19 percentage points of tax revenue collection in the region. That's a lot. But yet, we also discovered that this magnitude is indeed highly heterogeneous across African economies and ranges from 0.6 percentage points of GDP in the Democratic Republic of Congo to almost 8 percentage points of GDP in Senegal. So there's a lot of variation across countries. Concerning research, so this is a preliminary study shedding some light in the tax expenditure reporting topic in Africa. Yet much more needs to be done, and there exists certainly several possible ways to move forward. I think that the GTED will indeed be a great source of data and hopefully of inspiration for further research in the field. Just to give you a concrete example, an interesting avenue of research, I think, regards the political economy behind tax expenditures. So understanding better why is the level of scrutiny and transparency so different when it comes to tax expenditure compared to direct spending, for instance. What's the role of institutions? Is rent-seeking and corruption combined with lobbying and pressure groups one of the main factors, or are there other factors? So all these questions I think are worth looking into. And I hope, again, that the fact of having a cross-country comparable source of data will kind of trigger this research. When it comes to policy implications of our chapter, again, there are many and very important ones, I think. But if I need to choose one, I would say that, you know, our message or main takeaway is that reforming tax expenditure systems should be a top priority to mobilize domestic resources. This is true in every country and every context, but particularly for developing economies in the context of their need to mobilize resources to finance the Agenda 2030 and achieve the SDGs. And even more nowadays, while the world is weathering the COVID-19 storm, right, and governments desperately need additional resources to support those being hit hard by the pandemic and to ensure a sustainable recovery. So, you know, to finalize, yeah, this is definitely not a context-specific issue in the sense that it only matters to a subgroup of countries, poor countries, developing countries, or under a certain scenario. But the current scenario clearly increases the need to reform tax expenditure systems, and particularly, or even more, in developing countries.